Hi, good morning. Jason Sen from daytradeideas.com. I'm going to have a look at some Forex markets this morning. We're going to start off with the euro. We've had a really good correction in this lately, and although the weekly chart's starting to look quite negative and I'm slightly concerned about it, in the shorter term, on the daily chart at least, we're just approaching really good support. You can see here we've got a trend line going back to July of last year, so about 6 months old, this trend line, and it comes in around the 135.50 area today. So we've got to watch that carefully. You can see we've also got 100-day moving average support at 135.37. So I think that sort of 135.60-40 area is going to be really good support this week. And we are just getting oversold a little bit on the daily chart. The shorter term charts are quite oversold as well. We are still in an uptrend. So you would expect that support to hold really on the first test, which looks likely to be tested, as I say, early part of this week. And I think that is a decent buying opportunity. We should at least head back up to the sort of 130, what's this, 136 and a quarter, 136 and a half area, but wouldn't be surprised to actually see it steam higher. And you can't rule out even a test of this of recent highs, but if we did get that high, I would be looking for some sort of double top pattern, because as I say, the longer term charts don't look that good. This is cable pound versus the US dollar, and again similar sort of chart. We've got a really nice bull trend going back to the beginning of July, so again roughly 6 months old, and this trend line comes in here at 136.10 area. So yeah, good support there, and I think again not quite so oversold on the daily chart there, but it is good support. And the other thing that helps me have some confidence in that level, I'm just flicking to the 4-hour chart here. I've got some really good Fibonacci support at the 163.15 area, so that sort of 163.15-10 area, it's good fib support, it's good trend line support. Short term 4-hour chart, we're very oversold, and it won't take much for these MACDs to start turning positive on a small bounce. So if you're running shorts, I wouldn't run them any further than that for sure, and I think it definitely is worth trying some longs. You've got quite a good risk reward on that, because a break below 162.90 or maybe 162.80, if you want to give yourself a bit of room, you're out. So risk reward wise, I think that is a good trade. Dollar yen's also been correcting. We're just holding below this trend line here, which isn't a particularly long one. It only goes back to the beginning of November, so it's only a couple of months old, but still that is significant that we've broken it. And I do think we'll trade down to the 103 sort of 45.40 area. You can see that on the way up that held us back. On the way down it should support. It's good fib support as well, so I feel quite confident that well, I think it's likely we'll probably hit that level, but I feel quite confident that that will hold. What have we got in the shorter term? 103.40 is a 61.8% retracement level as well, fib wise. So yeah, all in all, there's a couple of good reasons to buy the dollar yen down there.